Okay, today is August 21st, 2013. Let's take a look at the S&P 500 quickly, and then we move on and take a look at the SPY. What was the other stock that we're going to look at? HPQ, Hewlett Packard, MGM, the GLD Gold ETF, CELG, Google, and Goldman Sachs. So on the S&P 500. Right now, a lot of people was looking at this 50-day moving average, but like I said in the past, the moving average only are relevant when there is within context. And the context is basically this pivot point here, which is the 1651.81, the close on this here. So essentially, we're trying to hold the support here, and it's basically been trying to test this support and resistance. When it broke through that a couple of days ago. Right now it's trying to reclaim it, and then today it's kind of struggle also trying to reclaim it. So right now essentially it is tagging this 50-day, I mean the 50% Fibonacci retracement based on this particular swing here, and it seems like that most likely it's going to come down and probably tag this 1625 level here somewhere around this 1625 level. And most likely, if it doesn't get a low bounce here, we probably come down and see the S&P tagging the low on this particular day, which is somewhere around the closing number for that day is 1608.9. So it's basically at 1609, to find some support here. But we might get a little bounce here on this 38.2 Fibonacci retracement here on the S&P 500. Now, if we take a look at the SPY, the ETF for the S&P 500, we can also see this pivot point right here, which is somewhere around the 165.74. And again, this got this 50-day moving average is sitting on right at this 165.74. So there's a little confluence between this support and resistance point, this pivot point and the 50-day moving average. So it appeared there's some relevance, that there is some bouncing and some price action testing the 50-day moving average. But again, by itself, it wouldn't matter anything. It's just any kind of moving average. If you draw a 100-day or whatever, eventually you will have price point hitting those particular moving average. So on these moving average, the best way to utilize them is basically use them as a trend indicator to see are they on a rising trend or the declining, falling trend and that sort of thing. But when you look at them as a resistance or support level, then you really have to find some context in which that is substantiate that particular level to be tested for support or resistance. So with that said, we could see right now it's also trying to bounce off of this 50-day, the 50% Fibonacci retracement. Now there is a trend line that's coming up here on this spider, and it's sitting somewhere around this 162 level, and most likely it will come down, and essentially it's also in confluence with this 38.2 Fibonacci retracement. So probably we'll see it to come down here, and maybe we'll get a little bounce here. And once again, there's a pivot low here. It's the 161.27, and we probably will see that and really kind of spook the market if we break this trend line, come down and tag this point, and then we get a bounce. And a lot of people basically probably looking at it to come down at this level here, which would be a 157.06, and that would probably will bring it down. By that time, it probably will tag the 200-day moving average. Then all of a sudden you get confluence between the 200-day and this particular pivot low. Then all of a sudden, this particular 200-day moving average become relevant, and then people could start talking about bouncing off 200-day moving average. But in reality, it's probably bouncing off of this particular pivot level. So that's the spider. And then next one, HP, Hewlett Packard reported earning after the close today and really got clobbered. You can see that it came down to this, somewhere around 23.90. Essentially come down to I think it's 23.90 or 23.40. So it's basically come down and tagged this low here, pretty much. This particular low at this level here, right? And essentially it's down almost 8%. And we probably will see some damage here on the S&P 500 and the Dow Jones tomorrow because of the S&P. Hewlett Packard is also part of the S&P 500 and the Dow Jones. And with the recent weakness showing from Cisco, IBM, and Intel, so this is just another reconfirm that there is some internal weakness in the tech sector. Although Hewlett Packard being kind of in trouble because of the PC slump for quite a while, and then now the enterprise business is also getting hit, and so are the IBM, servicing, software and enterprise business. That sector is also seeing some weakness. So it's not just because of a structural issue with HP, but it's also probably a global business type of issue as well to a certain degree. So we got to be aware of the HP probably will come down, and most likely, if it doesn't get a bounce on this particular level here, this particular pivot close, basically the 2340, we most likely probably will see it come down and try to fill this gap and get down to this 2125 level. So and that if that doesn't hold, most likely it will tag all the way back down to this particular pivot low on this this big swing here. I was in that earlier, and we were talking about maybe a possible turnaround and then tag break the 26 level and possibly come up and tag the 30. But right now, a lot of the followers probably already know that I don't carry anything to earning anyway. So even if I still have the position, I would have closed it out before the earning report today after the market closed. But I would have closed it out a few days ago, basically last week. And essentially, I got stopped out on one of my trailing stops, one of the protective stops. So in this market, it's important that you exercise your stop and just let it trail. Because right now the market could either come down hard, or it just kind of do a little bit of a correction and then start bouncing back up. So you never could tell, but there are some strong stock still exists in the market that you could play, and one of them is CELG. You can look at CELG here today. It came down and found this this level here, which is the close to the 50% Fibonacci retracement. And here you could also see some sort of confluence between the 50-day moving average and this particular, the gap support here, basically the gap fill area here, this opening gap. And essentially I was looking at it and you could see that it actually, kind of come up and book this little, pullback downtrend. And when it broke above this, that's kind of give me a little sign that this thing might be coming back up and tag this 78.6 and possibly come back up to this 150 level here. And if it could break this recent high, we could easily see this this stock might move up to that 158 level. So that's one of the stock that certainly you can see there seems to be consolidated down here. Got this little pullback, and it could be set up like a little flag here that actually you could look at this as a bull flag that actually getting up here, so you could do that major move. But right now I'm essentially looking for CELG to come back and tag this near this 150, and if we could break this 150, then I'm basically looking for a next target somewhere around 158. A little disclosure, I am long on CELG. Okay. And then the next one is MGM. We'll talk about MGM, and I traded MGM a while back, and a couple of weeks back, and then took the profit and got stopped out. So right now, essentially, we're looking at this. First of all, we want to see this long-term trend line here. You can see this big baseline, which is somewhere around 17 level, right? 1675 to 17, and you can see that it's kind of tagged a couple times, and it finally broke through recently, right? Okay, so those are the point that I want to make here on this particular long trend. And if we go back to the daily, you can see that it's actually coming back and tagging this this level here, which is somewhere around the 1767. That's the intraday high. So if we see this stock break out of this level, then look for a possibility of running up to the 19. Because again, you see the moving average is rising, so which is very positive. Although yeah, we are getting a little bit of a negative divergence on the MACD, but the momentum is still on the upside. So we want to see how high could this thing run if it break through. So that's one of the things that I'm keeping an eye on to maybe initiate a swing long when it try to break through this level, see what kind of price action it will bring. So that's one of the stocks that I'm keeping an eye on. And then the other one is GLD. We all know that that gold have been bouncing back up ever since the low that it made back in June. And right now, you look at the GLD, it broke through this 130, this 129.50. And right now, it's kind of tagging this. If we put in the Fibonacci retracement here, basically it's tagging this 127 extension. And if we could continue to move up, we're essentially looking at this possibility of getting back up to this 138, which will be close to $1,400 an ounce on the gold future price. Okay. But the other things I want to highlight is essentially the the possible flag pattern here. If you could see this, this kind of little, setting like a flag. So if we break this extension 127, it's easy to get up to this 141, which is near this 136 level, then get up to the the 161 level, then it'd be 138. So that's the things that I'm watching here for the gold GLD, is for this flag to to break and break above here. Then we'll probably see another rally on the gold. And then the next one is Google. We're talking about the weakness in Google and the critical level that Google have to hold, right? And which is this 160 level here. I mean the 860 level that it has to hold. Right now it seems to be testing that. And also I said if it could reclaim this trend line, this support trend line, I'd like to see it consolidate right above this trend line for a while. Then if we could break through this particular trend line on this downtrend here, and if we could break through and make a higher high, higher low, then we could see Google might be able to get back up to the 900 level and possibly get above this 920 and then make another new high. But right now Google is pretty much hanging in the air right at this trend line. If it breaks, we're looking at this thing to come down to at least test this 620 level area and possibly get down to this this 800. And once again, when it get down to this 800 level, we see that it's in the confluence of this 200-day moving average. Even if we get down to this maybe 818, then this 200-day moving average become relevant in terms of testing moving support and resistance based on the confluence of these particular support level, not because based on the moving average by itself. Then the last one that I want to look at is Goldman Sachs. And Goldman Sachs, we were basically waiting for Goldman Sachs to break about this 168 to tag this 175. And if we go back and take a look at the longer trend here, we could see that Goldman Sachs been hovering around this particular trend line, right? And it's very concerning because it come down for so many times. It's just like the more time that it come down and test those particular point or that trend line, then the odd increases that it's going to break through. So I'm not sure if Goldman is planning to getting ready to break break down below this trend line and possibly head down to this 145 or even might get down to this 137. So but right now essentially we're going to see if Goldman be able to hold above this 157, and if it could, then we need to see it to come back up to this 160, tag this 78.6 Fibonacci retracement and possibly get back up to retest that 168. But the negative things here is that you're seeing this 50-day moving average is kind of rolling over, and so is the 20 EMA. So I think looking at the weakness in the financial right now, with the QE tapering and that kind of stuff, most likely we'll likely see a breakdown of Goldman and possibly come down and test this 200-day moving average, which will be get down to this particular confluence once again on this particular pivot point. So now then you get this 200-day moving average confluence with this particular pivot point support resistance level, and all of a sudden people start talking about the 200-day moving average bounce or test of support. So those are the stock that I mentioned it before the close today in the market. So hopefully this will give you some insight on some of the stuff to keep an eye on, and good luck on your trading.